Any question?
No, sir.
Okay, so up to now we discussed during our first lesson, we discussed about different sources of finance, where we can raise finances and how we can, and what are the implication or impact on the businesses. So those we discussed during our first lesson. So we discussed sources of finance could be bank loan. We discuss about sources of finance could be issuing shares to the public if we are public limited company. We discuss about bond. Bond is a instrument which we can use to raise the finance as well. We can sell our fixed or non-current asset, which is like building, lands. All these we discuss different sources of finance during our first lesson. And you already discussed about how we can raise the finance, what are the really, what sort of decision we need to, or what sort of the factor really we need to keep in mind when we raise, the sources of finance or will raise our finances. So during yesterday lesson, what we learned, anybody remember what we learned during last lesson?
Yes, sir. We learned about investment appraisal. We learned about NPV, ARR.
Okay, good. Well done.
Budgeting too.
Budgeting tools. And we discuss about payback period method. Okay,
yes, sir. Yeah.
Daniel, what is meant by appraisal?
Sorry?
What is meant by appraisal? Appraisal.
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 Like, I don't know.
Appraisal mean checking the performance. Appraisal mean measure the performance. Yes, we appraise somebody really perform. Yes, have a good performance.
Yeah.
Reward we give them. If you're working hard with your employer, so they do end of the year appraisal and they will say, okay, you well done, you work really hard, you never absent from work, and they will give you some reward. It's called performance related pay. So when we are talking investment appraisal, we're looking the money we will invest, what we will get out of it. So appraise it, which project is a good or which one is not, by using the techniques payback period, NPV, and ARR we discussed yesterday lessons. Any questions?
No, sir. Since the slides weren't uploaded on the Moodle, so up till now there are no questions. I mean, if there are going to be slides available on the Moodle, there might be some new questions to be asked.
Yes, you're right. I'm going to upload on Moodle. I'm going to send you as well.
Okay.
After end of this lesson, I'll send you, because I just need to make sure, put the recording, everything on Moodle. And if NPV is a negative, what we'll suppose? We'll accept the project, we'll reject it.
We will reject the project.
Yes, we'll reject the project if NPV, net present value, is negative. So normally we don't accept the project. Payback period.
Yes, sir.
If one project have a 5-year payback period, other project 3 years, so which one will invest?
3 year.
3 years. Always payback period will go for the lower one. Well done. ARR is called average rate of return. One project has return 14%, other project 20%. Which project will choose?
20%.
20% higher return on our investment. So we'll go for the higher. Okay, we discussed budgeting methods. What those were?
Budgeting methods, sir.
No, we did discuss types of budgets.
Mm.
We discussed one budget, cash budget. Second budget, material budget, material purchase, material use budget, labor utilization budget. Yes, these are all types of budget which normally you prepare for businesses. Or within a manufacturing and production, we make the production budget, sale forecast, all the budget based on the sale forecast. If we are expecting sale will go up, will increase, and we always make the budget accordingly, which I'll go through more examples with you. Okay, so today I'll do a bit, on LO4, these ratios, and then we'll go back and we'll do little bit, LO3 will recap, and last lesson will recap everything. Then we'll finish our unit. So I'll send you all the recording as well, so at least you have a opportunity to go through and ask the question during last lesson. Yes?
Yeah.
Okay.
Okay. We'll move now. Okay, unit cost. What is meant by unit cost? What sort of the things make unit cost? Let's see, we are going to make a product. What sort of the things consist of unit cost? Let's see, we are making any product of your choice. Maybe we are making furniture tables. Yes, we are manufacturing table. What sort of the thing the unit cost is mean the table cost? Yes, labor, always we need to look around. How much is the labor required? We
Labor
always
cost,
need to, sorry?
labor costs, raw materials.
Well done. Labor cost, raw material cost, and other costs we call FOH is called factory overhead cost. That's not directly involved in, but still is a part of the cost. Like electricity bills, our factory rent. Yes, all we need to include within a unit cost. So that's all is called calculation of the unit cost, which we'll go through some examples as well. We didn't cover this bit. Okay, so we need to. Okay, we'll go through 4.1, 4.2 today. Financial statement. Anybody knows how many type of statement we prepare in accounts? Daniel, any thought? Financial statement. What is meant by financial statement?
I don't know.
Okay, financial statement. There are 4 statements normally company prepare. How many statement? 4. So first statement is called profit and loss. Profit or loss statement. We also called income statement. So first statement, profit or loss or income statement, where we'll calculate how much we sold, how much cost me, and how much my profit. Second statement is called balance sheet, a statement of financial position, where we'll always put our how much worth of asset we have. Asset, anything which we own, like building, machinery, equipment, cash, all these are our assets for the business. And liability, how much is the liability we are liable to pay to others if we borrow money? All come under the statement of financial position, also called balance sheet. Third statement we call cash flow statement, where we're looking how much money came in a business, how much money went out of the business. That's called cash flow statement. The last statement is called shareholder statement or equity statement. How many shares we have issued to the public during the year, how much dividend we have paid. Anybody knows what is meant by dividend?
So it's a certain percentage of profit that's given to the shareholders
Well done.
each year.
So certain percentage of the profit normally given to the shareholder, that's called dividend. Or we can simple other way around, we can call return on investment. So earning per share, how much is every shares I have, how much I'm getting. So everything is shown in the statement of equity or shareholder statement we also call. Okay, what is meant by ratios? Anybody knows what is meant by ratios?
So ratio is like action of one thing having a relationship with another thing. It's like uh, how one thing is performing in relevance to another thing. If
Well
it could
done.
be a proportion to.
Yes, ratio is a percentage, yes, or average of total. Yes, like a percentage. Well done. You very well said. So which will go through ratios and comparison. So today lesson, I'll send you separate formula sheets as well. So today lesson we'll go through. First we'll okay. So we'll discuss about little bit what is the difference between financial management and financial accounting. We'll go through debit and credit, meant by debit and credit in accounts. Good to know. We'll discuss financial statement like just I explained you, and we'll discuss ratios, why these ratios we prepare and what type of the ratios we can calculate to check the performance of the company. And we'll see different companies' financial statement, and we'll see what sort of the information contained within these statements. So I wish you in the end of the lesson we will be in a position to little bit know about the debit and credit, know about the financial statement, and will what is meant by financial ratios and type of ratios. These are my major area which I really wish we are well aware of. Okay. What is meant by financial information? Where we can get the financial information?
From the financial statements.
Well done. So Daniel, the financial information we can get about the companies from the financial statement. So we can get the financial information, how the company is performing, how much worth of the company has an asset. That's why is a big issue. Bitcoin in South Korea and various other countries being banned. The state bank or the central bank not allowing them to properly, and they put the restriction on the people to buy the our investment in Bitcoin. The reason is because the company don't have any physical asset there. If the currency value dropped, because nothing is a behind secure investment. So financial information provide the financial statement, but the Bitcoins don't have sort of, asset. So it's not giving us true financial information. So we are investing just based on the rumors or based on the information which is based on the IT technology. Nothing, behind is secure. So that's why financial information we can get from the financial statement. Okay. Debit and credit. What's come under debit? What's come under credit? Asset. Asset mean land, building, machinery. When assets increase, we do debit. When asset decrease, I'm selling my buildings, I'm selling my assets, or the asset value reduced, then we do credit. Liability. What is meant by liability?
So it's basically something that we need to return to somebody on basis of return. For example, if we borrow some cash from bank or bank overdraft, stuff like that.
Brilliant. Anything we owe, anything we have a legal responsibility to pay, we can call liability. Legal obligation. So legal obligation is a liability. So liabilities always we do credit. If the liabilities increase, I'm borrowing more money, I'll do credit. When I'll pay my liability, I'll do debit. And always I'll do credit as well. I'll do credit my asset and debit my liability. Because cash is going out of the business because I'm paying it, and the liability I'm reducing it. So I do debit. Income. Income also called revenue or the sales. Credit. Always income will be credit. When income decrease, we do debit. Expenses. What is meant by expenses? Any example of expenses?
When income increases, we credit it, right?
Yes, like we always say sales. If my sales figure increase, I do the credit, my sales is increased.
Okay.
Expenses, like salaries, expenses we normally do debit. When expenses increase, it means please don't consider as a money in and out. It's not a money in and out. It's a rule, debit and credit. Okay, I'll try to refer you one app you can download on the smartphone. It's called OnPour, where you can learn about the debit and credit as well. This course we don't need to go through full detail of debit and credit because all about we need a basic understanding. Yes, but it's good to know, as a finance student. If you want extra stuff, I can send you separate activities to do to clear it, which will help you in the further studies. Okay, so expenses debit, and when expenses decrease, we do credit. What about the capital? Capital is an investment. When investment increase in a business, we do credit. when investment will take from the business, we do debit. Any question? Okay, so we said first statement. Which statement we prepare?
Profit and loss account, income
So
statement.
profit and loss. What's come profit and loss?
Sales.
First, sales. Always we'll put the sales value at the top, and then we'll less our cost of sales. Cost of sales is consist of, if we need to calculate the cost of sales, opening inventory plus purchases, the things we purchase, the opening inventory we have the previous period. What is meant by carriage inward?
So carriage inward is the transportation cost that's been borne by the company when you bring in the supplies.
Brilliant, well done, great. Daniel, is that carriage inward mean the delivery cost? We paying like a delivery, like courier cost, and that when we purchase something, we add it in the cost because that's the cost.
Okay.
Then purchase return. If sometime we buy things but those are not fit for purpose, we can return them. And we always take out the closing inventory. Closing inventory, the inventory left, the raw material, we not used it for manufacturing. So when we add them all these together, we can get the value of, okay, sales less cost of sales. What we'll get?
Gross profit.
Gross profit. Well done. And then we always less all overhead expenses like rent, wages, salaries, and we'll get profit from normal operation, and then sometime we have other incomes, we can add them as well, like discount received. What is meant by discount received?
So these are the types of discount that we receive when we pay our prices on time, maybe, or when we do the bulk buying.
Yes, it could be bulk buying, or we making early payment to suppliers. They can give us discount. Disposal of assets, sometimes our normal business to buy and sell goods, but we have some spare building land and we sold it, we disposed off, we bought good number of years ago and we earn the profit on it. That's also other income. Any question, Daniel?
Yeah.
So please have any question, ask me. This is normally the structure of profit and loss account. Sales revenue less cost of sales, and we'll get gross profit less all expenses, and we can get the profit of the period or profit of the year. So this also called income statement as well, or people call profit and loss. Normally in manufacturing environment, the sole trader we call profit or loss account, but in company normally we call income statement. Okay, next, which statement?
Balance sheet.
Balance sheet. So balance shows are all assets and liabilities. What balance sheet shows? All the assets and
Liabilities.
liabilities. So we discuss our liabilities. So we'll go through balance sheet. We have two types of assets. One is called current asset, second is called non-current asset. Current asset is mean anything normally we use for a year. Cash, what is meant by prepaid?
Prepaid something, some expenses that we have been paid in advance.
Yes, prepaid can be asset, something we paid advance, but we not use it their services. Like car insurance, we are paying for next 12 months. That is a prepaid, that's the paying advance. When we'll carry on using it, it's carry on becoming expense. Okay, what is meant by debtors? Anybody heard about debtors ever?
Yes, sir.
What is meant by debtors?
Debtors are also known as trade receivables. These are the people who supply us with the goods or the products that we need.
Well done, great. Next is inventory. What is meant by inventory?
So it's the stock.
Well done, inventory is stock, raw material. Non-current asset, machinery, furniture, plant, which normally we can use them more than. That's why I also call non-current as a fixed asset, which we use. So asset goes always debit side of the balance sheet, and liability goes on the credit side of the balance sheet. So current liabilities. What is meant by current liabilities?
So they are the liabilities that are spread over the period of normally 6 months.
No, liabilities, current liability, anything which we need to pay within 12 months.
Okay.
Within 12 months, yes, because we prepare accounts every 12 months. Anything which we supposed to settle within next 12 months, we call current liability. We can categorize as a liability under current liabilities. Okay, capital is our investment. And if we have a drawing, what is meant by drawings?
So this is the cash that the company or the owner takes in for personal use.
Well done. We draw for personal use, that's called drawings. Next, non-current liabilities.
These are the long-term liabilities, for example, loan.
Yes, anything which we need to use more than a year. Sorry, anything which we need to pay with more than a year's time. Yes, we have a legal obligation to settle more than a year's time. It's called non-current liabilities, or we also call long-term liabilities. Bank loan, debentures, or bond. Bank loan, which we debenture, is a sort of piece of paper which is secure against our asset of the company, and the other people they can give the loan, and then we can give them paper back. It's called debenture. Bond is sort of piece of paper as well. Normally is a secure against our asset, which have a normally good number of years, 20 years, 10 years bond, and the face value of the bond we are getting less money, but at the maturity, when the bond mature, we can pay them whole money, whatever return are, including interest will carry on paying regular, or we call coupon rate. Any question?
So could you please repeat debentures?
Debenture is called secure loan. Normally, in term of the company, we can raise a piece of paper in the stock exchange, and we can raise finance. I have a building worth of 20 million. I can raise the debenture. That debenture I can sell in the stock exchange. People can buy the debenture. They can give me cash. They can hold the debenture, and that after a certain period of time, I can get my piece of paper back, and I can pay them money with I'll carry on paying as well with interest. It's a sort of bond. It's not a big difference, but there is a technically, legally is a difference.
Okay.
In Urdu, we call tamaskat benches. Maybe you heard. Okay, we'll go through. Next there. This is a statement of financial position. We also call balance sheet. So non-current assets always come first. Then we'll add all our current assets. Then we'll take out liability out of it. Current liability. Then we'll get net current asset. Then we take out non-current liabilities and we get net asset. Net asset always equal to our capital figure. Accounting equation, net assets equal to capital. So net asset equal to
Capital.
So the statement of financial position are also called balance sheet. Normally look like this type of, which I'll show you some actual company statements now. Any question, Daniel?
Yeah.
So you're getting, these are called statement company prepare end of the year. And
Sorry?
normally these are called financial statements.
Yeah.
Okay. This all been explained, what's come under current asset, what's come under current liability, like I already explained you. Business, we get the financial information from financial statement. That's come under the financial accounting. Any statement we prepare, ACCA, one of awarding body or the Chartered Institute, if those are the member of ACCA, is mean the financial accountants. Management accounts, which normally we not publish to the public, but will keep for internal records. Management accounts is to manage our day-to-day activities, where we keep the record of income and expenses. So these come under CIMA. It's called Chartered Institute of Management Accountants, CIMA, which is they deal with the management accounts, cost accounts, management accounts.
Okay.
Third, financial plan and budget. Financial plan have to be developed in the long term with the budget. and the forecast. Short term, often the next financial year. We have a next 20 year as a country what we're supposed to do, and the our annual budget is a short term budget which normally next 12 months what we'll do. So these all come under the financial plan, and these all provide the financial information. Any question?
No.
Yeah.
Okay, so I'll show you. Who like next? You like next?
The brand?
Are you like Marks and Spencer?
Okay. Yeah.
You like Daniel? You like next? Do you have a next in South Korea?
No.
So next, this is a financial statement of next. Next and Marks and Spencer, UK-based company, but they have operation almost throughout the world. They're selling. So we'll go through some statement. So this is a financial statement. And you go on their website, you can find a lot of design as well, different design of clothing. Okay, so we'll go through next. We said how many types of statement companies prepare?
3.
4.
3 to 4.
Yes, companies prepare 4, but sole trader and partnership normally 2. So companies prepare profit and loss, balance sheet, cash flow, and shareholder statement. These are 4. But if you're a sole trader business, one person running business, then you just prepare the balance sheet and profit and loss. Okay, we'll see the statements. Just 1 second, it takes a while to find within a, because so much information they put. Page 92. Okay, so this is called income statement, profit and loss. You will see there, first thing, the company have a sales. Yes?
Yeah.
2015 and 2016 have this statement. So how much was the revenue? You will see there 3999.8 million, and then 2016 is went up to 4176.9 million. You will see there the gross profit was 13 million, and it went up 1452 million during 2016. If you take out all overhead expenses, so operating profit means the profit before interest and tax, it was 867 million, but the last year was 812 million, 812.1 million. The finance cost is mean the interest, how much company paid, because they borrow a lot of money from other companies. So they paid 0.8 million, but this year they paid interest 0.5 million. And you will see there how much tax they paid. Yes, 169 million tax they paid. The previous year they paid 159 million. So value of the shares, you will see there 450.5 pence per share. So every share earning was 150.5 pence. Any question?
No.
Okay, Daniel, you getting yes?
Yes.
Okay,
So
so
it's a bit irrelevant question, but I feel like I want to ask this question. Could like people like us buy shares of companies like Next, the general
yes,
public?
we can buy. We can go to the stock exchange, Karachi Stock Exchange, Islamabad Stock Exchange,
Mm-hmm.
and we can invest. There are a lot of brokers, though deals they buy on the behalf of us are Askari Bank, HSBC Bank, Barclay Bank, and various other banks in Habib Bank in Islamabad deals with the shares. We open the bank account, they will give us online PIN number and we buy the shares and we can sell the shares.
Okay.
Because these are the public limited company and their shares is available to the public.
Mm-hmm.
Okay. Second statement is called balance sheet. And you will see how much worth of company's non-current asset. 6, 7, 8 million, yes. And how much were last year? How much shares and then the current asset were this year and the last year? Total asset, and you will see how much was the total current liabilities, how much were non-current liabilities, how much is net asset. We'll see their net asset, yes.
Yeah.
Yeah.
And then we said net asset should be equal to capital, or we call equity figure. Equity means the share capital. So 3118, we have our net asset, it should be equal to the capital figures. Yes, if you want to read it furtherly, how much worth of the bond and what type of the bond and when the bond is mature, you can go to these notes, further notes within a statement, and we can read it. Yes.
Okay.
Yeah.
Next statement we said change in equity statement. It shows how many shares they have issued during the year, how much profit they earn during the year, how much dividend they make payment. Everything is there within this year and the last year. And it shows the total figure we have in our capital, which is 318. You will see same figure in the balance sheet as well under equity. Yes, you see there 311.8, but there is a details, what's happened with that, how much shares they paid, how much they received, all sort of there's always a lot of information. You will see the total there. This is explanation of share capital or equity figures more in detail. So next statement we said cash flow. Cash flow statement, we'll see our normal activities where we use the cash, and then we'll see how much investing activities. Investing activities mean where we invest money, where we sold the asset non-current. So that's, they have invested a lot of money in these long-term assets. They use the cash. And financing activity is mean they borrow the money. Where they borrow the money, they purchase shares, repurchase it, because I issue the shares to the public, I can rebuy it from them and I can pay the money to them. And they issue more shares, we'll see there, and disposal of shares, and total net cash under this activity. Actually, they lot of liability they have settled during the year. That's the negative. So overall, our cash is positive 52.6 7 million. We have a positive cash balance. But the previous year, their balance was cash balance 272.7 million. So it mean they have a very less cash this year. Does it make sense?
Yes.
Yeah.
So that's all about. You don't need to be too much, but that give you the picture. You can find any company statement and you can look around. I'll send you the next statement is called Marks and Spencer statement as well. I have. Okay, next we're looking the ratios. I'll send you this separate formula sheet for ratios. We don't need to be calculate all the ratios, but we need to learn some basic ratios at least. So all the formula there. So major type of ratio, first is called profitability ratios. Profitability, how much profit we have earned. Yes, how much we have investment. So it's good to, you don't need too many ratios, all the formulas given. Always good to pick gross profit percentage. So what is the formula? Gross profit, which always given in the statement of profit and loss, divided by the revenue. Revenue means the total sale figure, and times 100, so we can calculate the ratios. Any question?
No, sir.
Yeah.
Next is operating profit. Always operating profit figure will be given in our statement of profit and loss divided by revenue. So just try two ratios. One is the gross profit and second is a profit from operation. Or if you want the third ratio to use, profit after tax figure always given in the profit and loss account, and equity figure, which statement shows equity figure we just discussed. Then balance sheet or statement of chain equity show the total equity figure of the year, like 311.8 million we just discussed. Next, so profit after tax divided by, we can calculate these ratios. So first ratios, category of ratios we call profitability ratios. Second is a liquidity. What is meant by liquid?
The ability of the business to pay back its liabilities.
Well done. So liquidity is anything which we can convert it quicker into the cash. If we have an asset, those can convert into the cash quicker. Yes. So we always say this company business liquid position is very good. They have more current assets compared to the current liabilities. Which statement shows the current asset and current liability figure?
Balance sheet.
Balance sheet. So we can find the figure of total current asset divided by total current liability, and we can calculate current ratio. Second ratios is called quick ratios or acid test ratio. Quick mean those assets we can convert them into quick into the most liquid. But sometime inventory stock could be outdated. I have a lot of Windows 98 CDs for suppose. Is it Windows 98? Anybody will buy it?
No.
Oh, because these are, so that's why we sometimes calculate the ratio. Total current asset, the inventory figure will take out from them, and then we can divide it by current liabilities. Does it make sense?
Yeah.
Yeah.
And then next ratio is called use of resources, or we also called efficiencies ratios. Efficiencies ratios. Okay, inventory turnover period for suppose. Inventory divided by the cost of sale. Inventory figure will be given always in our balance sheet, and we can divide on the cost of sales, which is given always in the income statement, and we can times by 365 days working in a year, we can find how many days we are holding the inventory in a business. Or we can calculate the trade receivable period. It means we sold our goods to customer on credit, but how long they took to make the payment. So this way we can calculate these ratios. And the last ratio is type of ratio is called financial position ratio. These are gearing ratios. If we'll drive a car in a high gear, what is the problem?
The brake problem, speed problem.
Yes, high gear mean high risk. Yes, driving with a high speed is a high risk there. We could be accident. Yes, we can't brake it maybe properly. So high gearing ratio will come. It mean high. So gearing ratio first. Non-current liabilities divided by, there are two formulas. Non-current liability divided by equity plus non-current liability. So we can use it, or we can do non-current liability divided by equity. It means how much money we borrow, how much money we have our own share capital. So that will help us to find 60% company owned by someone else. And then is a profit from operation ratios, interest cover ratios, profit from operation divided by finance cost mean the interest we paid. So it's give all, and then internal and external user. Internal, what those are internal? People inside the business, and external, people outside the business. Okay, we'll go through the ratios. Financial ratios are the useful indicator of the firm performance. Ratios can be calculated from the information provided in the financial statement. So financial ratios, these are all I just discussed. Liquidity ratios, use of resources, and financial position ratios. I put this mind map there, that all, what's come under liquidity, what's come under use of resources, profitability, efficiency of the use of resources. These all ratios we calculate. And then working capital ratios, which are also called liquidity ratios. So current asset divided by current liabilities. So we'll go through. We've been given this balance sheet and 2 years figure. We have, this is the income statement 2 years, 2010 and 2011. We have a sales figure. We have a cost of sales. We have a gross profit. We have operating profit. Okay, we'll calculate gross profit margin. What is the gross profit margin? Gross profit divided by sales figure. Can we divide? We'll divide. We'll calculate one ratio. Do you have a calculator?
Yeah.
Or you can use phone if you have. So with you. So 52 divided by 209 times 100, because we need percentage. So how much will, yes, Daniel, you getting? What percentage will come? 52 divided by 209.
52 divided 29.
Yes, 52 is my gross profit. Can you see on the screen my cursor?
Yes.
And my sales figure is 209. 52 divided by 209 times by 100. So how many percent we have gross profit?
24.
Sorry, how much?
24.
Well done, great. 24.88, can say 25, or 24 is fine too. If we do rounding, yes, maybe we can say around 25, because or we can say 24.88%. Yes?
Yes.
And in the same way we can use, let's try next year, 2011, 45 divided by 196. How much was the last year, this year?
Around
45 divided by sales value, which is 196, times by 100.
around 23.
23. So this year was 23 and last year was around 25. Yes.
Yeah.
So what do you think? Is it good or bad compared to last year? Is decrease? Yes. Our profit decrease. Our gross profit margin decrease compared to last year. Last year was 24.88 and this year we have 22.95, because these are the 2 years, 2010 and 2011. So 2011, for suppose, it dropped from 24.88 to 22.95. So which is showing the company's not performance was good. Can we invest in this company?
Yeah.
Yes, they're still earning profit, but we'll check, how much dividend they paid, shares they have. If you see there further down, you will see there how much shares they paid. They paid 6 and they paid 5 now. So they are paid now compared to last year. So maybe the following year when we'll invest, they will pay less. Okay, we'll go through next now. So these two ratios we calculated is called profitability ratios. We'll do the liquidity ratios. So how much I have my total current asset? 4,229 plus 3, that give me 74, and my current liability 36 plus 10. Okay, so I'm going to calculate 74 divided by 46. It's coming my current ratio 1.6. So every pound of my liability, I have 1 pound and 60 pence worth of asset. So I have a high asset, low liabilities. What do you think? This is good for business? We'll do the next year, which is 2011. So if I look my current 37, 23 plus 5, can you add them all?
28.
So 37 plus 23 plus 5 is 65, yes? Divided by 65, because we have a liability that is 55 plus 10 is total current liability 65 as well. So my current ratio will come 1. So last year was my asset were 1.1 and this year I have now 65 divided by 65, because I have a both same figures, equal to 1. So it means 1 pound worth of asset I have, £1 worth of liability I have. It means other thing we don't have, yes? Enough money. So last year was against £1 worth of liability, I was £1 and 60 pence worth of asset. So in this way we can calculate these ratios. You can try in your own as well. Yes, in the formula sheets. Yes, and you can do the figures. Okay, in your assignment you can pick one or two ratios. You can explain and you can discuss. Just what is meant by ratios, and these things you can discuss. So today we have covered financial statements, different businesses, and we interpret the financial statement using the ratios. An internal and external user. Internal are employees, managers, and external suppliers, investors, government, local agencies, customer. All these are external. They can use this information to make a decision either to deal business or do business with this company or not, or invest this company or not, based on these ratios. Any question? So today we learn about the financial ratios. And what is meant by ratios?
Averages or the percentage return, we could say.
Brilliant. How many type of statement we prepare in account?
4.
1 for profit and loss
Balance
sheet, cash flow, and shareholder equity or equity statement. Well done. So these are 4 statements. Who can use these statements? Internal and external user. Internal is mean implies, managers, those people inside the organization. External, it could be investors, suppliers, taxmen, and stock exchange, local agencies, investor, bank, lender. All these they can use these statements and they provide. How many type of ratios we can calculate in? Major category of ratios: profitability ratio, liquidity, use of resources, and financial position. Any question?
No.
Yeah.
Okay, I'll send you these slides, the formula there. I'll send you some other companies' financial statement like Next and Marks and Spencer. Please go through, read, and listen this recording of this lesson, and I hope so you will get it, and we'll do one final lesson. We'll recap everything.
Okay.
So could you please upload all of these slides as soon as possible so we could just start off with the assignment?
Yes, sure. I'm going to upload today, okay? And I'll organize and I'll drop you emails as well.
Okay.
Thank you.
Okay. Have a nice weekend, guys, everyone. Hope so weather will be nice. Almost finished weekend, huh?
Yes.
Okay, brilliant. Okay, Daniel, we'll
Yeah.
speak you next week then.
Okay.
Try your time and speak with you all on next Saturday then.
Okay.
Bye.
Bye.